Good morning and welcome to Your Real Estate Life. It's your day in real estate radio. One more candle, one more plan, smarter mortgage decisions for the year ahead. Today is my birthday. I'm here, 61 years of age, and I've been on the radio now just shy of how many years now? A lot of years, 20 years. And of course, I've been in the mortgage industry now in my 39th year, helping you and assisting you with your mortgage decisions. Whether purchase or refinance. My name is Michael Harris. I'm a mortgage loan originator, 233-410 of United Mortgage Corporation of America. And United Mortgage Corporation of America has an NMLS number 3189. It's an identifier. When you work with a professional, that's what you need to be doing. And I've been doing that for a long time. I see a lot of new things each and every day, and I'm always learning. But I have a lot of experience that I'd like to help and give to you. When you're going through that process, you need to have the right decision at the right time for the right reason. Go to our website at yourrealestatelife.com or unitedforloans.com. That's unitedforloans.com. When you go to that website, you're going to be able to get started. You can play with the calculator. You can do all sorts of fun stuff. But you can give us a call. 888-543-3980. That's 888-543-3980. You can have your very own program. Appreciate you being here. If you have that number, 888-543-3980, call anytime. Let's have your own very own solution to what it is you're looking to do. You can follow us on YouTube at Your Real Estate Life. Like and subscribe. I'd appreciate that. You can do that at any time. Those of you who are watching right now, that's fantastic. I appreciate you being there. And you can actually do that as we're doing that now. So I'm kind of looking at that, and I just added that like and subscribe. So make sure you do that and get that job done. We're building that platform a bit. Many of you listening to the radio, YouTube. Why YouTube? YouTube people, why radio? I understand. But it's all about getting the right answer to the right item, to the right decision for the right reason. So we appreciate your eyes on us and liking and subscribing. But I talk about one more candle, one more year, and more of an opportunity to plan smarter. And each and every year of my financial life, I was trying to do that to a point where when I was in my 20s, everyone said I was going on 40. Now that I'm 61 years of age, I'm not sure what I'm going on. I'm just now making sure everything I did worked right for me. Whether I had life insurance, I had disability insurance, or any other factors that I did have, I did. And I had those. So it's my job that I've made my purpose to help you navigate your financial lives effectively, spending the right money at the right time for the right reason to leave more money on your side of the ledger. And we talk about it later in today's program, Perfect Financial GPS. So we're looking to get you on the right path, 1 year closer to retirement, 1 year deeper on your mortgage, 1 year more equity perhaps in your property, and without paying as much interest. The question becomes, are you aging financially with intention? Is it happening to you, or are you making it happen for yourself? Now, it's how you interpret these results that are very, very important. And I want to make sure you're doing that effectively, because doing that right is what needs to be done. There's many things that you can do. And what we do here at United Mortgage Corporation of America, we look at the economic calendar. We look at what's coming out. We look at what occurred here with the Supreme Court 6-3 decision, talking about the tariffs, whether they're legal or not. Not to get political, but based on some of that, that's going to be a large issue for interest rates. Are interest rates going up? Or are they going down? If we have a higher deficit, can we see higher rates or sustained rates longer at this level? Now, we are closing loans with 6s. We are closing loans with 5s as the front number. Now, there are buy downs, but buy downs, you have to be careful. If it's money coming from the seller or other parts of the transaction, great. It's not your money, other people's money. But if it's your money, are you paying money today to pay less money over time? And that less money over time, when is your recovery? Are you seeing it now, a year, 5 years from now? How much money is too much money today to save for the future? You are an individual, and your plan will vary depending upon what it is you're looking to do. So we want to make sure you are looked after accordingly. And when we have people calling in saying, hey, what's your interest rate? Well, gosh, I don't know. What is it that you want to hear? I mean, are you growing your family? Are you downsizing? Are you preparing income stability for retirement, eliminating higher interest debt? What is it that you're looking to do? All of these things matter. They really, truly do. I mean, it's the cost of doing nothing. Many of you think nothing is good, and sometimes it's better than doing the wrong thing. But some people are talking about adjustable rate loans, depending on your timeline. May make sense, but you have to understand how they work. You know, is your equity sitting unused? Do you have equity? And maybe a home equity line of credit would be important for you to have access to in the future. If you, depending on your situation, you can use your equity line, simple interest to pay down amortized interest, and that's very effective. So we talk about all these items, but it's really entirely where you sit and where you are. This matters. You matter. I spend your money the way I spend mine, sparingly. I want value from my money, and so should you. Your lender should not be your best friend. Your lender is who you're making payments to, and you want to make as little payments as possible, mostly just principal, not just interest. So you want to make sure you're doing this effectively. Write down our number. You're going to need it. 888 LIFE 980. 888 543 3980. When you call that number, let me know who you are. If our team isn't answering live, I like to get back to you personally. Every single call, I make it a purpose to get back to. I want to make sure the team is handling you and your questions effectively. Whether you're looking for personal finance information or you're looking for mortgage information, we lend in 5 states: California, Colorado, Montana, Texas, and the state of Washington. We can do what is called DSCR loans, debt service coverage ratio loans, in 46 states. Those loans are loans for investors who the rent is offsetting the mortgage payment, principal and interest. So we can set loans up to fit your needs. If you're self-employed, salaried, whether you're looking at money coming from pension, whether you're looking at rental income from properties, or maybe cash on hand, asset depletion, we can put loans together for your intended purpose. So we have loans that recently, we have some calls coming in, we have no credit. We have solutions that can be had, but we need to identify what it is we're looking to achieve or do. And that is what I need you for. So I need to understand and hear from you. What are your concerns? What are your questions? Do you maybe just want to evaluate your current mortgage statement, seeing if there's something better you can do? We can do that. Statement at unitedforloans.com. Statement at unitedforloans.com. When you send there, I'll evaluate the statement, get back to you. Send me, of course, I have your email when you email that, and I'll let you know. Based upon what I see, I'll look at value to the property, see at your equity position from a lender's point of view, and see what we can do. But it's about gaining the results and putting you on a better path. I'm Mike Harris, president of United Mortgage Corporation of America. We'll have more after the break. Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator, 233410, United Mortgage Corporation of America, NMLS 3189. Visit our radio website at yourrealestatelife.com or get started at unitedforloans.com. That's unitedforloans.com. We are for loans. We're just not for the interest that you pay. Now, you're listening to us on Your Real Estate Life on Fox Sports Ventura, 1590 AM, 97.9 KVTA, or KEarth 101, streaming at kvta.com. on the first, and the latter at kearth101.com. Now, you could join us on YouTube, our YouTube channel. Like and subscribe. I'd appreciate that. Your Real Estate Life. We have many visitors that come through there and take a look at our program, and we appreciate that at all times. And we're reaching a lot of people in our broader audience where we're helping in some financing cases, but we're also helping eliminate debt much, much sooner. Now, what happened last week? A lot happened last week. We had the Fed minutes that were released. We looked at the previous Fed meeting held 21 days or so ago. And this meeting, the Fed held rates steady. But what we learned was several Fed members described policy as near neutral, meaning nearing the end of the rate cuts. So whether we see one cut, two cuts, or no more cuts, some of the chances of our next meeting is as little as 5%. We've seen them vary from 4 to 8%. They gyrate depending on news that comes out. Now, with further cuts are possible, inflation continues to cool. Several members warned that easing too soon could allow inflation to accelerate. So there's still that battle. Inflation has moderated, but remains above the 2% goal. But it's doing a lot better than it has in some time. Now, some participants noted tariff-related pressure in core goods. Labor markets, meanwhile, appears to be stable. So we're watching these things. The Fed is data dependent. They are prioritizing inflation, credibility, and not signaling imminent easing. That reduces the likelihood of sudden policy-driven rate volatility. Now, we do have a Fed chair that's being replaced in May. So we do have a new one coming in. We'll see how that affects things for those meetings thereafter. But I think then we're in tune maybe for one more cut. But again, economic news, as I said, 6-3 Supreme Court decision, and looking at possible deficits. We'll see how that goes. We do have President's State of the Union on Tuesday night. We'll see what comes from that as well. So we're watching that very carefully when we price loans and look to close with our current clients and trying to get the best of certain markets at different timing. All these things matter. So what also matters is on behind the scenes with the mortgage market, the mortgage bonds, we're looking at the spread between the 10-year Treasury and the 30-year mortgage rate. It's about 200 basis points. So when we look at those two numbers, that's the difference. Generally, norm is about 170. There might be actually room for 0.25% or so improvement, even if nothing really occurs. It has to do with stability. It has to do with volatility. It has to do with risk. If we can minimize and gain a little bit of that, we might see the bond market and mortgage rates improve. When we see them improve as a result of that, we'll see that from 601 average rate right now, we might get something in the higher fives average rate. We are already closing. I have a loan right now. It's closing at 565 for a client. So it can be done. It's an $802,500 loan, and it's closing at 5.625 on a 30-year fixed. These loans can get done. So when you see the averages, the national average is 6.01, that's not necessarily what your results would be. Now, we get the question all the time, why would I go to a mortgage banker or a broker, and why not go to the bank? Well, we work with the wholesale markets. We also look at what's the best out there available based on your unique situation, salary, self-employed, whatever that case may be. And we're looking to bring the rate down to the lowest common denominator based on the timing that you want to have. Whether you're buying points to lower the rate or you're taking a higher rate to keep the fees down, there's various ways that we can move the loan through the process. But my goal is to try to keep that money in your wallet as long as possible. So sometimes it's not necessarily getting the lowest rate, because rate sometimes doesn't matter. What matters is the timing of your loan and how you're paying it off. So you want to keep that in mind. Call us anytime, 888-543-3980. That's 888-543-3980. At United Mortgage Corporation of America, our goal is to save you money on your purchase or refinance, forward or reverse. But at the same time, we want to take a look at your overall picture to make sure you're making or paying the least amount of interest possible, decreasing your interest volume or your interest footprint, allowing you to pay off your debt in as little as 1/3 or 1/2 the time without changing your lifestyle. So it's very important that we try to accomplish that by saving you money. Now, we see a 10-year Treasury yield that's about 408 in nature. We're looking at some benefits there on the 10-year Treasury that was actually increased by about 2 basis points this week. And we saw the 2-year note increase by 8 basis points, and the Fannie Mae 5% coupon was down 2 basis points. Good news. We're kind of stable, as I said. The Dow was up 125, NASDAQ was up 339, S&P was up 64. Gold this week increased $59. That's had a lot of volatility of late, and we're watching that very carefully. But the economic calendar ahead is what I really kind of watch, because that's news. That's past. But what's going on going forward? On Monday, we have some Fed governors speak. We have Christopher Wallen speaking at 8 a.m. Factory orders coming out at 10 a.m. We have some forecasts at 0.2. Previous was 2.7. So we'll see where we are there. On Tuesday, Chicago Fed President Austin Goolsbee will be speaking. 9 a.m. we have S&P Case-Shiller Home Price Index for the 20 cities for December. Again, these are times that are on the East Coast time, so put it in perspective there. My day starts usually fairly early. We have Atlanta Fed President Raphael Bostic speaking as well at 9 a.m. Christopher Waller speaks again on Tuesday at 9:15. Fed Governor Lisa Cook speaks at 9:30. We have wholesale inventories coming out for December and consumer confidence coming out for February. Boy, it's a busy Tuesday. A lot of talk, a lot of speak, a lot of reaction. We'll see how that goes. And on Wednesday, it continues. Richmond Fed President Tom Barkin will be speaking at 9:35 a.m., followed by at 11 a.m., Kansas City Fed President Jeffrey Schmidt. He'll be speaking. So a lot of people speaking prior to them being quiet, prior to a Fed meeting. They're going to be speaking on the direction, if the Fed's going to hang steady, what the general course is, what they believe, what the risks are, and what they're watching. So we're going to be watching those headlines from each of these speakers. Now on Thursday, we have initial jobless claims coming out for the week that just was. And we're watching that carefully as we do each and every Thursday. But on Friday, we have producer price index for January, which was a delayed report. We have core producer price index for January. We have producer price index year over year, core producer price index year over year, Chicago Business Barometer, construction spending for November, which was a delayed report, followed by the construction spending for December. So we'll get those on back-to-back items. But our goal is smarter planning, gaining information to make a better decision, because making a decision with no information, you're just guessing. And it's getting accurate information to make that decision possible. When we work with you and look at your purchase process, your professional, your realtor will help you through that process, making sure you got the best negotiation possible. But then you have other professionals that join your team. You have your home inspection, eventually an appraisal. You have us as a lender. You have your insurance professional. All these people, your CPA, all these people come into play. You have an offensive line protecting you against the defense. And football season just finished, but that means you still do not want that defense coming in and chasing you, so you're a scrambling quarterback. You're only as good as that offensive line protecting you. And my job in the lending side is making sure your money stays on your side of the ledger. And I'm anticipating any problems that I may see, so the problems do not exist. So whether it's evaluating your income, getting the right loan, getting the right options available so you can make the right decision, but also throughout the process, other things that will attack or try to change that process, I'm going to defend and make sure that you have a journey that is stress-free. I want you to be able to sleep at night, put your head on the pillow, be able to rest and be good about the transaction. We want to eliminate all these unknown items. So we want to kind of tie these things to planning smarter. And that means understanding. The markets will move. They will. So it's you understanding what you need to do about your mortgage and structure that could handle that movement and not be able to have to react every time. Oh, well, I'll just refinance. Oh, I'll just do. No, you should have something that works with you and has stretching ability both ways. Preparation is calmer than prediction. So we want to make sure we prepare and we put the right loan in process. So when we look at the PCE report that's going to be coming out, we look at all these other items. We want to make sure we understand what they mean, or you have working with someone who does, so we can put these plans in action together. So today, as you're listening here on KBTA, you're listening on K Earth 101, write down the number. Write down the number 888-543-3980. I want to evaluate your current loan or your plans going forward, whether you're buying your first home, moving up, moving down, adding to your portfolio. I want to evaluate to see what it is you pay today. And perhaps the low interest rate loan you have on your first mortgage may or may not be the best loan, because you might be paying still a lot of interest volume, but you may be paying a lot of volume or interest somewhere else. So it's putting together the right plan for the right reason at the right time. 888-543-3980. That's 888-543-3980. Now, we have our websites. We're on yourrealestatelife.com and unitedforloans.com. We also have our YouTube channel at Your Real Estate Life. That allows you to follow us at your freedom. But again, call anytime. I would like to get you on a webinar for some more information about a perfect financial GPS that we'll talk about shortly. But you can send an email to me at interest@aheadformoney.com, interest@aheadformoney.com. When you send that email, I'm going to send you a few links so you can understand how a perfect financial GPS will eliminate your debt in as little as 1/3 or 1/2 the time. No obligation. If you go to the webinar either at 8 a.m. or 5 p.m. that day on Tuesday, you'll get some good information. 1 hour, don't have to be on camera, don't have to speak. Or you can set a time directly with me and we'll have a nice little chat and understand what it is your goals are and what you have and see if it's right for you. Because if it's not, it's not. But chances are it is. When you started driving and started using the GPS in the car, or you started using your phone and put the destination, oh, I know how to get there. I'll get there just, oh, I'm fine. And then you find out you missed the accident, you missed this, you did this, and you would, oh my gosh. It's what you don't know. You need to know. And having perfect financial GPS with decisionary processes, that's the difference. Personally, I took my 26.4 years that I was taking down to 12.3 on my own, down to 7.9 years. That 4 years and 4 months, I mean, that saved me $100,000. I don't know about you, but 10,000, 100,000, I mean, any amount of money is a good savings. So my thought is, would you spend $5,000 to save $50,000? Sure. Why not do it again and again? So there's ways in order to improve your current situation and what you are doing. And my goal is to help give you the enough information so you can evaluate that on your own. But it starts with you sending an email, interest@aheadformoney.com. When you send me that email, I'm going to send back to you some information. I'm going to give you the registration and information to join us on Tuesday, 8 a.m. Pacific or 5 p.m. Pacific time. Change it to your local market, whether you're listening in Mountain, Central, or East Coast time. And I can help throughout the United States as I do. But as it comes to lending, we will do forward mortgages and reverse mortgages in 5 states, out here on the West Coast mostly, but California, Colorado, Montana, Texas, and the state of Washington. Now, we do what is called DSCR loans, debt service coverage ratio loans. These loans are for investors. As investors, you can purchase a property and the rent will cover the monthly payment. It's so straightforward that we're doing that right now. We have a loan going in Florida. We have one in Tennessee. We have some other states that are also going forward. We recently just closed a reverse mortgage in the state of Montana. We have a few more going here in California. And then we have some purchase loans going here in California. We have another transaction in the state of Washington and one in Texas. So we're working on various loans throughout the United States, but we're helping people navigate their financial and personal financial goals. Whether you're moving up, moving down, moving sideways, whether you have a growing family, whether you're looking at college education still ahead, or you're looking to downsize. We're here to help that plan go forward and making sure we have the right information so we get the right results. 888-543-3980. That's 888-543-3980. 3980. Now, we're going to continue in our next segment talking a lot about personal finance. And we're going to go over how the Money Max account kind of works. But it's hard really to explain when you have a program, an algorithm, line code, millions pages of line code or lines of code, making decisions. And if we could actually do it ourselves, we would. But we're not a perfect financial GPS. We can pretend to be one, but we're going to miss something. It's like getting up to the par 3 course and hitting the ball, and hopefully you don't go in the sand or the water. But maybe you hit the green, but maybe you didn't hit the hole in one. That doesn't happen too often. So we could change the analogy all the time. We could be bowling. How many perfect games have you bowled? Let's make it a perfect financial decision. So again, when we come back, we're going to talk more about that, but I appreciate you joining us today here on Fox Sports Ventura, 1590 AM, 97.9 FM, streaming at kbta.com. I appreciate our audience also on K-Earth 101, Sunday morning at 7 a.m., streaming at kearth101.com. Our audio of our program can be found on our websites at yourrealestatelife.com and unitedforloans.com. Our show will also then be posted through our YouTube channel at Your Real Estate Life. So it's not only a face for radio, I'm here. And as I said, another year, another candle. And today is my birthday, but I'm here spending in the morning with you. Pick up the phone, give us a call, 888-543-3980. That's 888-543-3980. We're here to help families not only choose a mortgage, but make sure the mortgage you choose is the best and working best for you. It's the interest footprint. It's the amount of money you pay. It's the amount that you're spending over time. It's just not, oh gosh, let's take the mortgage statement and let's make the payment. Understand it a little bit better. Take a look at your mortgage statement online, or if you get it in the mail, take a look at it. What percentage of that payment is interest? And what percentage of the other side is principal? Now, you don't take out the taxes and insurance. Those are stable numbers. But if you've had the loan less than 18 to 22 years, you're not even a 50-50 unless you started putting extra money in. But when you put extra money in, are you just rounding it up? Are you just throwing extra money? And sometimes when you throw that extra money, they don't actually put it right to your account. They stick it on the side and they assess it to your next month's payment. So you're losing the benefit of what you're trying to accomplish. I want to show you how you can be finishing on top. You can make better decisions just with easier and understanding some information. 888-543-3980. That's 888-543-3980. Remember, go to our websites. You can do that at yourrealestatelife.com or unitedforloans.com. That's unitedforloans.com. I said we kind of take a look at what's going on in the calendar, and we do that each and every week. It's a busy week, a lot of Fed speakers before our next Fed meeting. I mentioned the chances of a Fed move is probably closer to about 5%. So we're really not going to get a move, but we are listening to the language. And with some of the stuff going on the tariff side, it's got my attention. And I'm looking at the deficit and what's going to happen. And does that mean staying stable for longer? We'll see. We've got President Trump on Tuesday. And we'll talk more when I come back after the break. I'm Mike Harris. We'll have more after the break. Welcome back to Your Real Estate Life. It's Your Day in Real Estate Radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, Mortgage Loan Originator License 233410, United Mortgage Corporation of America, NMLS 3189. Now, visit our radio site, yourrealestatelife.com, or go to unitedforloans.com. That's unitedforloans.com. We are for loans. We're not just for the interest that you pay. Now, my goal is to try to have you pay the least amount of interest possible over the term of your loan, but doing that responsibly and correctly. And it's not just, oh, gee, let's make the mortgage payment and go 30 years. Or sometimes you go 25, 20, or 15, whatever it is that you're doing. Now, taking a loan and paying that off sooner, most of the time, may allow a lower interest rate, but we want to make sure that is the case. But it means a higher payment because you're putting more towards your payment. Now, it's forcing you to that payment, so you got to make sure it's affordable. You don't want to be cash poor. But under that notion, we want to make sure we understand what is called discretionary monies, monthly discretionaries. What's left over at the end of every month? Do you have a dime, a penny, a quarter, or what? What's left? $100, $1,000, $2,000? Now that's taking into account, not for qualifying for loans, but taking into account your monthly budget. How much you pay for gas, water, power, electric, insurance, car insurance, life insurance, disability insurance, all these items, because it's what you have left at the end of every month that counts. Are you spending at a deficit? Are you spending more each month than you're bringing in? We need to have a talk about that. We need to understand then how long you have before you deplete your assets. Through the Money Max program, we can also figure that out. So it's going to help you during the good years, bad years, and beyond. It has predictive ability if you're looking to purchase, if you're looking to do something different, but it eliminates wasted interest. It organizes your obligations. It creates liquidity awareness and improves principal reduction strategies. The goal is not speed, but the goal is control. And it gives you that ultimate ability for perfect financial decisions. And that's kind of what I emphasize. If it costs you any money to do, it's got to make sense. If it doesn't make sense, it doesn't make sense. If it costs $1 and it doesn't make sense, it's $1 wasted. But it works with variable income. It works with cash flow drives. And it really, truly does everything you can ever imagine and then some, but it doesn't touch your money. It doesn't access your accounts. You have complete privacy. But you are a business decision that is giving you perfect information and advice. It's having someone smarter in the room than both you and me and many others combined that doesn't talk back to you, but just gives you good information that you can use. So it does work well with various programs that we use in lending, whether you currently have those programs or you need those programs. But sometimes it doesn't necessarily make it better, but it does combine to make it sometimes easier. The program can work with a home equity line of credit, could work with insurance products, but it can work with checking and savings. So when it works with checking and savings, that's the down and dirty. That's pretty easy. And we're seeing differences. We're seeing elimination of debt. Now you do owe your principal, but elimination of the interest that you are scheduled to pay, it's eliminating that in a third or half the time without changing your lifestyle, in some cases, even 5 to 7 years. And you're not doing anything different. You're just doing it more effectively. So join us on Tuesday, either 8 a.m. Pacific or 5 p.m. Pacific. And that's going to be sending me an email, interest@aheadformoney.com. When you send that email, I'm going to get you out information regarding that webinar. Let me know, hey, I'd like to attend the webinar. Here's my name and here's my phone number. And then I can add you to what I have. And your number's not being sold to anyone else. It's coming from my primary purpose to help you get more information. And I'm not going to nag at you. And I'd love to have you show up or schedule a time with me so we can see what it can do or improve your situation. So as right now you're listening, you're driving somewhere, you're on your way home from work, going to work, on your way to an event, going down to the local home improvement store, whatever it is you're doing, get down the number or remember 888-LIFE-980. Check in with me. Let me know what I can do, or interest@aheadformoney.com. I'm going to be looking for your information coming over today, and then I'll be getting that out to you so you can join us on Tuesday, or we can talk prior. But we have a busy weekend. We have our programs here on Saturday and on Sunday. We get a lot of phone calls coming in. I respond to each and every one. This is not AI responding to you. It's going to be me if the team's not answering live as you call in. But I'm going to make sure we get the information out that you need, whether you're purchasing, refinancing, reverse mortgage opportunity, or you're going forward, but maybe looking at investment loans, DSCR, non-qualified loans, looking at bank statement, 12 months bank statements, sometimes 3, sometimes 6, 12, 24 months bank statements. We're able to help you with those investor and self-employed household solutions. But income can be variable when it comes to the Money Max account. We can do that kind of financing. It is possible. We help smooth those income cycles, support reserves, create intentional financial movement, and make scaling, investing, and planning more sustainable, especially with the future programming. You have the ability to put in a future purchase and see what effect and how that works for you. You can see your new debt-free date. You can understand it before you do it. It's not, should I have done that? No, it's, can I do that? And you know, and you have the evidence. But the core message here is your family and your legacy. The goal isn't to pay off the house fast or slow. It's to live well while building something meaningful. It's doing it the way you want to do it. Your structure determines your obligation. The Money Max strategy determines control of those decisions, confidence in your monthly decisions, flexibility during life changes, stability across generations. These are the things that I want to emphasize and have you understand so you can utilize them for your benefit. The Money Max account is not an investment product. You're not purchasing something to invest in. You're not trying to get it to get high returns. It's a cash flow optimizing strategy designed to help households use the money they're already earning, but more efficiently. Most families don't struggle because they don't make enough money. They struggle because they can't. Their cash flow isn't coordinated. Income comes in, bills go out, interest accrues daily, decisions are made in isolation. I want to kind of combine all these together and show you how that can be done. The Money Max brings structure to the process by organizing how dollars move automatically so cash is working harder before it's spent. When you pay interest on your credit cards, you're on one side of the wall paying interest. I want to get you on the other side of the wall so you're borrowing money that you don't pay interest, and perhaps it's then being paid off each and every month, but you get the money at no cost for 30 days or your loan cycle or your balance cycle. So it's about interest volume, not interest rate. How many dollars you pay over how much time across all debts combined, not just a mortgage. A lower rate does not always mean a lower cost. A balance carried longer, even at a low rate, could generate more interest dollars than a higher rate of debt paid off sooner. So when we talk about a mortgage, sometimes it's better on the higher rate for lower costs because we're going to have it paid off in a certain timeline. So it's understanding all the details that matter. As a mortgage banker, mortgage broker, I help you through that process when you're looking to purchase. We're looking to get you pre-approved, pre-qualified. We're going to look at your financial information from a lending perspective to get you qualified with your debt to income ratio. We're going to make sure you're pre-approved so when you write your offer, you know you'll have a loan that closes. But on the other side, I want to make sure I'm effectively explaining, but also showing you how you could eliminate that debt as fast as possible by not over tipping your lender. Because when you look at that mortgage statement and you see that you're paying more interest than principal, you're tipping quite a bit. And that's evidenced on your closing statement, on your closing disclosure, where on the very bottom it says tip, total interest percentage. And if your rate's over 5.2% on your front end rate, you are paying over 100%. You are. And my goal is to bring that number down large. 888-543-3980. That's 888-543-3980. Your focus should not be what's my rate. It should be how much interest I will pay in total. And it's that pain number that's the large number that you need to look at and then come up and design an idea to help eliminate that item over the term of your loan. That is the distinction that the Money Max program makes. And that's where you finish out further ahead. Timing on deposits, flow of discretionary, daily balance reduction, any dollar makes a big difference. I'm Mike Harris. We'll have more after the break. Welcome back to Your Real Estate Life. It's your day in real estate radio. Glad to have you joining us today, whether you're joining us on our live radio today on KBTA out in Ventura, or you're on KEarth 101, or you're actually listening to our show recording by going to yourrealestatelife.com or unitedforloans.com, where our shows are archived on the audio side. And if you're wanting to actually watch our program, we have our YouTube channel at Your Real Estate Life. So wherever you're going, thank you for being there. Like and subscribe on our YouTube channel. I appreciate that a lot. But give us a call, 888-543-3980. That's 888-543-3980. We do the show each and every week. We're out in Ventura every Saturday at 9 a.m. and every other week on KEarth 101 at 7 a.m. Now, we've been on radio for close to 20 years. We've been doing that on the weekends here in Southern California on some various channels throughout evolution and time. And I'm doing the side of the mortgage side now for my, 39th year, long time. Back in the days, we were kind of looking at the typewriters and bubble jet printers and fax machines, paper rolling up and pagers and all that fun stuff. And we kind of evolved through the process and got to where we are today with education and information flowing from every direction. And who do you believe and what do you do? So you need to have that group of experts on your team. And with technology, how it works today, having the Money Max account is having someone on your team and becoming a disadvantage for your opponents. It's getting live information real time to make the best decision possible. Whether you're adding expenses, increasing income, changing priorities, reclassifying items, it's giving you cash flow efficiency to then utilize your monies effectively by creating a barrier of safety for you and your family. It's interest management. It beats rate obsession. Planning beats reaction. You know, I can't say that enough, but as we have people who call and ask about rate, we go for a payment. But I want them to understand the full picture. But the goal is getting them approved so they can buy or get what they are wanting to achieve and do. But then it's looking to handle it the best way possible. So there's a few rounds of understanding, and it's not a fire hydrant all at once. But I'd love you to take a look at what this may help you to do, even on your own if necessary, or with the assistance of the Money Max program. Join me on Tuesday at 8 a.m. or 5 p.m. for a 1-hour webinar. You don't have to be on camera. You're fine. But I'd like to show you how that works. Send me an email, interest@aheadformoney.com, AHEADFORMONEY.com. When you send that email, I'm going to get you out some links so that you can watch a little bit more. And then you also then can join. And then I'd like to talk to you individually if your time allows, so we can figure out what this can do for you, not for everyone else. Because when I show people they are debt-free in as little as 1/3 or 1/2 the time without changing their lifestyle, I've had people fall out of their chair. I've seen people reduce six figures in less than a year or two. I've seen those results. I want those results for you. I can do this nationwide. Tell your family, friends, everyone you know nationwide. I'd love to sit down and chat to show personal finance. If you're in the mortgage business, you're a mortgage loan originator, or you have a mortgage loan originator you're tied or close to, I'd love to talk to them and how they can help their past clients or current clients succeed and their referral partners. So give us a call, 888-543-3980. That's 888-543-3980. Now, I talked about this loan. It works a lot with other mortgage products because someone who gets a reverse mortgage will have the ability to have optional mortgage payments. When they have those optional mortgage payments, they can apply that debt towards other items and pay off debts sooner. And having that, it works really well. But there's also a reverse second mortgage, and that could also work well having those optional payments. Now, you still have your first mortgage to pay, and so you need to afford to make the current payment, but you won't have another payment added on top because now you can redirect those funds elsewhere that you're pulling cash from on that equity second under a reverse mortgage. But a home equity line of credit also works, but it does require that interest-only payment on the amount that you draw. So you do have that additional payment. So qualifying, debt-to-income ratio, and jobs and income matter. Where on a reverse mortgage, not as much. But there is a process for that reverse, and we can discuss that. We can discuss a home equity line of credit. Even if you don't need the money right now, it's a great thing to have because you only pay on what you owe. So getting a home equity line of credit is a fantastic security blanket on the backside. But if you don't need it, I can also show you how perhaps you can use that equity line to reduce your amortized debt using simple interest. And we can kind of run that and show you the benefits of using simple to pay off amortized and reduce your debt much, much sooner. So these are the things that we like to share with you on our program. We do this mostly, of course, each and every week. As we have topics coming up regarding the economy and things at hand, we go over those. But my goal is to help you navigate through the process. You do what you do each and every day. I can't pretend to do your job. I may understand it, but that doesn't mean I can do it. It took you a lot of training, perhaps, to do what you do. Been doing it now 39 years, long time. My 39th year. So I can't say I've seen everything, but I've seen most everything. And when I look at different scenarios, I'm able to pull from the history and the items that I've done in the past and kind of look to navigate the best way possible, but also understanding what's going on today and the volatility, but also what your goals are. So I do want to understand your why. Are you looking to grow? Are you looking to move sideways, stable, or are you downsizing? I mean, what is it that you're trying to achieve and do? Because different products, different loans, different terms dictate different results. And not everyone fits in the same product. Now, a lot of people go to the 30-year loan, and that's understood. But the goal sometimes is that 30-year loan, you may only be there for 3 years. Spoke to a client this week who said, well, this will be a startup home. We're not going to be here more than 2 or 3 years, but I want to get into this property, and then we'll eventually go somewhere else. That's their goal. So is there a loan that actually is going to be cheaper for them to preserve their monies and what they want to do so they can achieve their next goal faster? And it's not necessarily putting them into a 30-year loan or even a 20 or 15. Maybe there's loans out there now that are fixed for 5 years or 7 years that perhaps saves a little bit more on the interest and prioritizes that earlier versus later. Is it spending less money in points and fees today that they're not going to see recovery till year 5 or 6? Or is it taking a slightly higher rate under that other program to eliminate points and some fees, or getting a credit from the seller negotiated by your realtor to gain your goal better, but understanding these items and not guessing? And that's what I like to make sure you're thinking when you're going through this process. But you need experts and people on your team helping you through that process. Those of you who own a home, should I refinance? You know, it depends. What is it that you're looking to achieve? Is it for rate or payment? Is it for payoff and term? Are you doing home improvement? Are you doing an ADU, accessory dwelling unit? What is it that you're looking to do? Now, some people say, hey, I refinance, I skip a payment. Well, that was true. You do it every month and you never have a payment again. So that's not quite true. You're either financing it or you're walking in the interest, but you didn't pay any principal. So it matters about the rate you choose. We have a loan closing right now, and perfect example. We got his payoff demand. His loan amount is exactly what he owes today. But what will happen is when he goes to close, he's going to walk in his per diem interest to the end of the month. And then his first payment would be on April 1st, paying for the month of March. So he's not actually bringing in a payment March 1st for principal and interest. He's paying the per diem for the month that he would have owed. So it's less, but he's not reducing principal. So it's a matter of the structure, whether you finance it, walk it in, or what it is that you're looking to achieve or do. Now, right now, we have property taxes that were due February 1st, late April 10th. So right now, property taxes are due when you're closing an escrow. You also have impounds. If you have impounds, taxes, insurance monthly, your lender is paying those payments. But you want to make sure as they're due that they're dispersing those. So if you have others who are listening here in other states, your taxes are due at different times. Here in California, February 1st due, late April 10th. So generally the lender disperses your money in March. So you want to make sure that happens so you don't have delinquencies. If you purchased in the last year, you probably will be having shortly, you'll be having a supplemental tax. That's your property taxes, because you didn't actually get taxed on what you paid. It is based upon your previous owner's tax level. So you're going to have a supplemental tax. So be prepared for that. I have a client who did their purchase and we're waiting on that supplemental tax, but he's prepared for it. His taxes are going to double based upon what he has printed, but he was aware of what they were going to be. So he's getting a reprieve at the moment to get hit very shortly. So he's going to have the taxes that are due based upon his bill. And then the supplemental tax will come in that he's going to owe that difference. Depending upon your property that you purchased, it may have been a property that was bought as an investor and he fixed it and all that, and the taxes may not have caught up to them either. So you want to make sure that the taxes are not being assessed on the property, and it should be also then moved over unsecurely to the previous owner. So that's going to be something with the tax assessor. So we've been running into those issues and items when homes are being improved. So that has to do with flipping or moving property fast. Whether it's even a half a year or a year, depending on the timing, that can happen. But it's being aware of the circumstances, understanding the title, the clear of title, and understanding what you pay and how that's working. Now, there are some insurance agencies that are being phased out in April, and people who have renewals they're not being renewed. So it's making sure you have your insurance in place, understand when your renewal is coming, and make sure your policy is going to be renewed or you're shopping elsewhere. We have an individual who currently has an insurer. She got a notice. She has never filed anything, but she got a notice for policy not continuing. The issue now is she's looking for alternatives, and some of those alternatives, some of the options are double because now she's a kind of a newbie somewhere else. So she's in the process, and we're in the process of trying to get better policies and better coverage. So it is a painful item. So anticipate those items sooner versus later. Do not wait for the problem. Anticipate where you're going and then understand the decisions that can be made. I talked about the theme of the program being today is my birthday, 61 years of age. I talk about one more candle, one more opportunity. A birthday is not just aging, it's recalibrating. I have all the energy that I bring to you today with 39 years in the business, 20 years on radio. The smartest borrowers are not the fastest, they're the most prepared. And people said I was 20 going on 40. Now that I'm 61, I'm not sure what I'm going on. I'm just making sure those decisions at age 20, those decisions at age 40, they're paying off for me today. I was able to put both my children through college with no debt, one with a master's. Their lives are getting started, and they're getting started with no debt. I was able to pass that on to my family and legacy. I was able to make sure I was covered with proper insurance and various other coverages when I went through a hard time, when I was a victim of an item that wasn't my fault, but my car got hit. And I went through a hard time. I had access to funds and monies based upon what I had set up. Otherwise, I would not have. It's making sure you're making the right decisions before they're being forced upon you, so you have options when they come unexpectedly. Whether you're getting started right now, starting your family, you got young kids in place, it's understanding these items and getting them to be affordable for solutions to save you money down the line. But making sure you're not overspending, but making sure your budgeting is correct and right and has the best decisions possible, just like you do when you drive and have the GPS help you navigate where you're going faster and more effectively and safely. That's what I want to help you with your finances on each and every step, whether it's financing your property, gaining security with maybe an equity line, working way through the process, referring to your friends, family, relatives. I'm here to help throughout this process. 888-543-3980. That's 888-543-3980. Go to yourrealestatelife.com or unitedforloans.com. Check out our YouTube channel at Your Real Estate Life. I want to be there to help. I want to make sure I can get answers to your questions and perhaps provide the solutions or guide you to the right location. On this program, we have realtors on the program on frequent occasions. We've had estate planning attorneys, as we do each and every month, talking about the things that matter. It's your bottom line that matters, and it's navigating that to get down to the finish that's important. Without hitting the detours, without hitting the roadblocks, it's making those decisions and kind of being confident. And I talk about it and I say real estate decisions aren't just financial ones, they're personal. They really are. But it's how our family grows. And we want to make sure it works well for us. It's where memories are made, how legacies are built. Stability matters. I'm Mike Harris. Give us a call, 888-543-3980. Until next week, what kind of loan do you have? You know, this week I'm looking at Tuesday. I'm looking at the president's address. We're going to see how that affects things, what's mentioned, what's the reaction to the marketplace. But again, I'm looking to take time with my family, enjoy the weekend. We got USA, we got hockey going on Sunday here. We got the finishing of the Olympics. We got preseason baseball getting started. I see some box scores already. Who's there, who's not, who all of a sudden can throw a ball and who's got their arm falling off. We're finding out all of that as well and how the season's going to shape up. We're watching everything. We're going to get hockey back. We got the intermission going on, all this fun stuff happening. I'm looking to have time with my family. I hope you do as well. We'll talk next week.